The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. You may know of Ellipsis Labs by their first product, Phoenix, a fully on-chain order book DEX that's done over $50 billion in unincentivized volume. This is one of the strongest teams I know in crypto. If you're interested in working for a mission-driven company, Ellipsis Labs is hiring engineers who are passionate about crypto and finance to work on Atlas. You can learn more and apply on Ellipsis Labs Twitter, @ellipsis_labs. Don't forget to check out Atlas too, @AtlasXYZ on Twitter. Hey guys, today we have on two very special guests, Steve Lee from Spiral and Ren from Electric Capital. And they recently wrote a very thorough paper that broke down Bitcoin consensus. It's really the first time I've read a paper that goes through some of the intricacies, nuances of Bitcoin and how consensus is reached. Happy to have both of them on. Steve, if you'd like to introduce yourself, and then Ren, feel free to introduce yourself after.
Hi, thanks for having both of us on. My name's Steve Lee. For the past 5.5 years, I've led Spiral, which is an initiative at Block. We have the fortune to work on anything we want to work on. We focus on open source Bitcoin, largely software development. We also contribute to design some creative efforts, but mostly software tech. We have a full-time team. We've given grants. We've given like 80 or 90 grants over the past 5 years. Given the flexibility that we have to work on stuff, one of the projects I worked on this year, along with Ren and Lynn, is the BCAP project, which we'll talk about today.
Hi, I'm Ren. I'm an engineer and partner at Electric Capital. Been here for the past 3.5 years. We're a crypto-focused venture fund, and we also spend a lot of our time contributing to projects that are in the open. So things like codeslaw.app, which is a GitHub-style search for deployed contracts, the developer report, which is an annual report that shows where developers are building within various crypto ecosystems. We have many pulse sites that try to utilize the transparency of the data on blockchains to help folks wrap their head around things like stablecoins and NFTs. And this year, I had the honor of working with Steve and Lynn on this Bitcoin paper, which has really shored up my understanding of Bitcoin. And because there's always been something lingering in the back of my head, spending so much of my time on the alt L1s, that I figured it was a long time coming to really dive deep on Bitcoin.
Yeah, and just quickly, how did you guys connect in terms of working on this paper? Like, where did that come from?
Yeah, well, Avichal Garg, who founded Electric Capital, I've known him since before either of us were in cryptocurrency, so I've known him a long time. And we were just chatting casually about Bitcoin and different software proposals and potentially some drama stirring up in the space. We were talking about that. And prior to that conversation, he'd already introduced me to Ren, just saying, hey, Ren's starting to look at Bitcoin more now, because previously Ren had analyzed a lot of the other cryptocurrency ecosystems. So I already knew Ren, and then I'm like, Avichal, I would like to do this project, but I don't have enough time to write the whole thing. And now knowing how much work Ren put into this, there's no way I could have done this on my own. So Avichal's like, Ren might be interested. So that's how we got connected. And I reached out to Lynn because I thought she would also complement Ren and my skill set as well. So I think the three of us really made a great team to create this. I'm a little bit more technical than than Lynn. Lynn understands economics and game theory a little bit better, but we all overlap our skill sets pretty well. But we each sort of bring our own strengths to the project.
Okay, so then let's dive in. What is really the essence of this paper, and what was the motivation?
Yeah, motivation was that we all were observing more frustration by people championing changes to Bitcoin, specifically consensus changes. There's passionate people who really feel like different proposals are the right thing to do. They're working on them. Some people are trying to build businesses based on them. There's venture capitalists investing in businesses that are either would benefit from or require these changes. And that starts getting in dangerous territory if there's not consensus. So then, okay, do we have consensus? How do we know we have consensus? It raises those questions. So for me, it was the first time since 2016, 2017 era where I kind of felt like there might be some drama and maybe like reckless actions taken within the Bitcoin ecosystem that could harm everyone. I mean, harm, set Bitcoin back. And then I realized that my own knowledge of forks and all the different scenarios, it gets very complicated. My own knowledge of that was rusty. I hadn't really spent mental cycles on it since 2017. So I'm like, well, I need to like brush up my own skills. Then I realized, oh, most people who are around then probably are rusty as well. And then I realized 95% of people in the space weren't even around then. But they don't even have that direct, knowledge because they weren't even in the space. The best they could do is probably read like Johnny Beer's like Blocksize Wars book or something like that, which is certainly recommended, but it still isn't the same as being there. So that was a big motivation for this project. Like that, and then the other motivation was that I felt like investors. Like in 2017, investors had, I think, a big role because when there is a coin split or a futures market on a coin split, investors can communicate quite well. They can like sell one coin and double down on the other. That's very powerful. We speak to that in this project. But with a soft fork, like a soft fork can happen and occur, and like investors could be asleep at the wheel. And in fact, I think the natural state of things are investors would be asleep at the wheel, and some consensus change could get forked in and they don't even really know. And if that precedent were set and all of a sudden 3 or 4 years from now, we wake up and 10 changes have been made to Bitcoin in at least some people's perspective, reckless fashion, investors might just be like, this is not the coin we thought it was, and we sell. So I think it would be a lot better if investors were more engaged earlier so we avoid that outcome.
Yeah, I think so I got an early look. I was fortunate to see this paper before it came out. And in reading it, my first thought was that we have, BlackRock coming in now. We have Michael Saylor piling money in. We have a lot of, we do have the institutions coming in now. And my inclination reading this is probably the best way for a traditional financial firm, for example. And that is not saying that those are the only actors who would read this, but this is a perfect way for somebody at BlackRock to understand how consensus within Bitcoin works, right? Like they're coming in, they may understand the digital gold theory, they may understand the store of value theory, whatever it may be. They have no idea how this system works from a sociological level or whatever it may be. Why do you think that something like this was never put out before? Is it, and I wanted to add one other additional little aspect to that. Do you think there's been some reluctance to put into writing anything more than this kind of notion of rough consensus, right? And if it's too structured, right, people start to think that, power players are, maybe pushing something in a direction for themselves. And why did we never see somebody break down consensus in like such a thorough format?
Ren, do you want to maybe start? And I have a few thoughts too.
Yeah. So I haven't been around as long as Steve, but if I had to speculate and guess, I think that historically so much work has been put into just gaining adoption and some semblance of usage of these various networks. And so much work has been put into even just standing them up as distributed systems. And there's so much work that needs to be done on the technical side to make these platforms and networks even usable, that we're probably at a point in time where it's important to start thinking about different constituents, and the term we use in the paper is stakeholders, that comprise these networks, and to think a lot deeper about the incentives that motivate them, the powers that they have, and more importantly, the repeated game that happens between these different stakeholders. And Bitcoin being the largest of these networks seems like the highest impact, most important thing to study, because it's also the only major network where the founder is no longer there. And if these networks are truly decentralized, how things play out in Bitcoin presents a preview into how things might play out in these other networks over time.
Yeah, I'd add to that. I think, well, if you look at how this came about, it was just 3 people who volunteered their time to work on it. I think we chose to do that because we saw it as important in this moment in time. And like for the past 7 years, prior to 2024, I personally just didn't see it as a priority. It would have been valuable maybe in 2016 or something, but I wasn't working full time in the space then, and Ren wasn't either, and I don't think Lynn was either, right? So the 3 people who happened to work on this weren't even working full time in the space in 2016. So I think that's one reason. But you touched on another important reason, I think, Gwart, which is there might have been a reluctance by some people, because there's definitely a view, and a view that I agree with, that you don't want to create like a blueprint. Like, here's the blueprint for how you change Bitcoin. And then like everyone like quote agrees to that. And then that can be gamed. That's like a threat vector. So that is not, so a non-goal for this project is a blueprint for how to change Bitcoin. In fact, I want to be emphatic, like this project is neutral in the sense that it's not for or against changing Bitcoin. And it's not an advocate for any particular type of change. And it's certainly not intended to be a blueprint for how to change Bitcoin. Because this project, even if you are in the camp of ossification and Bitcoin should never change, this project's for you, because you should ask yourself, how does Bitcoin not change? People's introduction to Bitcoin is like 21 million. It can't change. It's immutable, right? And it's like, that's generally true. That is a characteristic of Bitcoin. It's a reason you should like the project. But okay, once you got past Bitcoin 101, let's ask ourselves, how does it not change? Because it is software. It absolutely can change, but it gets really complicated as the project entails. So I think even if you hold the perspective of let's never change Bitcoin, it's really good to analyze and understand, why doesn't it change more frequently, and what's preventing it from changing?
Yeah. So how did you guys go about kind of categorizing these actors? Maybe like from, the most important, and in your mind, kind of measuring the impact that each stakeholder has. And you guys kind of broke these down. So feel free to just run with that however you want.
Yeah. In terms of breaking down the different stakeholder groups, we thought about following the lines of clustering or dimension reduction. The goal is to find different stakeholder groups that don't have overlapping incentives or powers. In that sense, the stakeholders are orthogonal to some degree, and likely explain the vast majority of stakeholders because they are orthogonal. So from that approach, we were able to identify the different stakeholder groups. We have 6 listed in the paper. There are the economic nodes, the protocol developers, the investors, the miners, the app developers and users, and finally the media influencers. And they all have different powers, different incentives, and no single stakeholder has unilateral control at any single point in time, even during consensus changes.
Yeah. I know you mentioned this point, consensus game theory. Can you kind of explain the broad strokes of that kind of definition of game theory here?
Yeah, from a high level, from looking back at past consensus changes, and maybe the most illuminating aspect of it was SegWit due to how contentious it was. The different stakeholders have their own preferences. Sometimes these preferences are public, sometimes these preferences are private. The concept of consensus game theory is the back and forth repeated game between the different stakeholders that forces the stakeholders to reveal private preferences into the public. In cases where all of the stakeholders are aligned with the change, that repeated game can be very short, and it can be very fast. In cases where there are large differences in the motivations and the goals of the different stakeholders, different actions are played and counter actions are played. So the paper has a heat map that shows the timeline of SegWit that tries to summarize it and shows the timeline as it plays out and how different stakeholders use their powers, whether it's an investor who is selling down a fork in a chain split token market, whether it's a protocol developer publishing, reviewing, merging a change into core, whether it is someone from the app developer side proposing a UASF to like some degree, or in some cases, you might even have a consortium of stakeholders, such as the New York Agreement, that spans multiple stakeholder groups that play a card and create an action that elicits a response from other stakeholders.
Can you just, like, for the audience, maybe go over the SegWit 2x, Blocksize Wars briefly, and explain maybe what you, I know you say weren't around full time at that point, but maybe like the essence of that and kind of what happened and what we saw with, people selling coins on one exchange and then, large exchanges and miners getting together, like sort of like give us a little bit of a historical perspective on that.
So like the 2015 to 2017 era of Bitcoin, a big looming question was like how to scale the cryptocurrency systems to more users. Everyone knew that there was a 1 megabyte block size for Bitcoin. You could only do something like 7 transactions per second. Also in that era, there was a lot of like VCs funding companies like in 2014, 2015 for payments. Like they expected it just to take off 10 years ago. Everyone using Bitcoin payments. And clearly 7 transactions per second isn't going to compete with Visa. So there was one camp of people, big blockers, who are like, the solution's obvious. It's right before our eyes. Just change one number in the code, make the blocks bigger. You can do a lot more transactions. That's certainly true, but there's ramifications to that. So there's also another segment of developers and users and Bitcoiners who were small blockers who wanted to keep the block size small and instead find other ways to scale Bitcoin. So those are the two camps. And it was contentious, like that one group was not able to convince the other group. I mean, there's certain people, I think Jameson Lopp was in the big blockers group and switched to small blockers. So some people were persuaded, but not everyone. So in 2017, things came to a head. There was the New York Agreement, which Ren referenced. I think that was in May or so of 2017. And it was it was kind of symbolic because it was like suits in a room who represented powerful companies and interests in the space. And they agreed to activating SegWit, which is a proposal that had been around 2 or so years that protocol developers wanted to see through. But also the compromise was to double the size of blocks, hence SegWit 2x. So I think a mistake that group made is coming out of that meeting and then like basically saying like the decision's been made for everyone. This is, as opposed to, hey, we met and here's a proposal, let's get feedback. And there's a huge difference between those two attitudes. And there's so many people in Bitcoin who throw up on the first attitude, and that's exactly what happened. And then there's a lot of drama and contention and fighting. Ultimately, SegWit did get activated, I think, August 1st. And then from then until the fall, there was like one camp saying like, well, you agreed, like part of the bargain was the SegWit 2x is going to activate as well. We're going to and that would require a hard fork. Ultimately, that group capitulated and it didn't occur. Exactly why, I don't think we'll ever know. I certainly heard a lot of insider news about like, oh, this happened, that happened, but those are still just small pieces of the story. There was also a futures market on Bitfinex in which people investors could, sell one coin and double down on the other. And that happened. And it's like something like a 10x value difference between like the legacy chain versus like with 2x. So, that would be my summary.
Thanks for listening to The Gwart Show on the Blocksize Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
There was some kind of thought, especially, I don't know how accurate it is to be kind of revisionist about this, but there's some kind of rationale that a lot of the problem, ironically, was that the SegWit people had a fairly straightforward and cohesive plan, and then everyone else was sort of having to, argue amongst themselves. And it was this small group that, primarily developer driven, that were pushing SegWit itself, and then nobody else could get their act together. And that may be sort of why, it turned out the way it did. But I'm kind of curious, like looking back now, so that's what, almost 8 years ago. Do you think that there is much to glean from a period like that up to now, where we've, 10x market cap, we have a plethora of new players? I mean, I think that's, sort of leading into the motivation for the paper again. But like, how much can we learn from history in terms of going forward? Or has the game changed so much that it's maybe not that important?
I think it's both. I think everyone should definitely study, history in general, including this specific history, and learn from it. But I think one mistake, I see some people who feel like, oh, we won in 2017 and the users defeated the big companies. And I mean, that was the result, but does that guarantee that's always going to happen in the future? I don't think so at all. There's disagreements on exactly why things played out the way they did in 2017. I don't think those will ever be resolved, but I don't think anyone should hold on too tightly to like, oh, it was because of the Bitfinex exchange, or it's because of the UASF hats or something.
Yeah.
So I don't think we'll ever really know. My lesson is, I think every activation of a change that has ever occurred and will ever occur has some unique flavor to it. And I think the activation method or mechanism for every change to Bitcoin to date has been different. Yeah. So which again, I think is actually a good characteristic. There's not a blueprint that's been printed. So yeah, I think one lesson is just sort of expect the unexpected. It's going to be different next time. And that is a motivation for the project as well.
Yeah. And I mean, Ren, if you want to touch on that, going back to the project as a whole now, can you kind of walk us through signaling, for example, or, miner signaling, or, nodes running new software? Can you kind of break down what changes look like? Maybe if you want to differentiate, hard forks and soft forks, wherever you want to go. But yeah, kind of going back to the paper now, what does this mean to you in terms of like activating changes?
Yeah. So in terms of activating changes in the recent history, most of the changes have been done by a soft fork, which provides nodes on the network the opportunity and the grace period to upgrade their nodes. So we have a chart in the paper that shows it takes roughly 40 weeks for the network to upgrade when the core client changes. And I think that is quite important, because as the network has grown and as the asset has grown, and consequently as the businesses that have been built on top of Bitcoin have grown, it means there is more at risk whenever there is a consensus change. And to dive into the paper, in terms of the ways that the different stakeholders can signal their preference, it varies. So miner signaling oftentimes is misconstrued, and in the sense that people think it's more overpowered than what it really is. It is not a vote. It is a signal that their nodes are ready for the upgrade. And I think that oftentimes people pigeonhole themselves or get tunnel vision, and they think that if the only thing I get is the hash rate and the hash power, I can push through whatever change I want. But one thing to remember is that miners, they're in the business of converting energy into Bitcoin. which means that they have dollar liabilities that they have to pay off that are ongoing, which means that if the economic nodes, for example, large exchanges do not upgrade their nodes, the whole network does need to upgrade. It can't just be one stakeholder group that upgrades in order for consensus change to become more widely adopted. And even historically, when we look at SegWit, the adoption rate for SegWit took years. like it 4 years ago, the percentage of transacting wallets that were using SegWit was probably in the low 10%. Of course, today it is 90% plus. And I think that is a very important thing to think about, especially for activation mechanisms, that there is a lot of nuance in it. So for example, if there is a consensus change that, and we have an example in the paper that talks about a bounty claim, and I have personal opinions on how certain changes that are being discussed with respect to covenants should be activated. But there are certain technical changes in consensus changes where a slow rollout via a soft fork opens up a plethora of security concerns that could affect user funds if only part of the nodes on the network upgrade, and not enough of a grace period is given. And the paper talks about that in greater detail.
Yeah. Can you go back to that bounty point? Can you kind of explain what that is?
Yeah. So the bounty claim attack happens when part of the network upgrades to use a new consensus change. And if users, and the reason why users might end up in applications that use the new consensus change is that the application developers tend to be much more risk on in terms of their how fast they are willing to adopt changes, because they often tend to be startups. So by their very nature, they are very risk on. And what that means is that if users interact and use script with a new opcode, because of how Bitcoin reserves opcodes for future upgrades, the hash looks the same whether you're on an unupgraded node as an upgraded node. But on the unupgraded node, that transaction will always evaluate to true if using this if the upgrade uses this reserved opcode approach, which means that script Bitcoin that might end up locked up on an unupgraded node can be taken by literally anyone, and they don't need to be a significant or very sophisticated actor, because that transaction will always evaluate to true. Whereas the user who thinks that they're interacting with the application on an upgraded node, they might perceive that all of the nodes on the network is executing the script as they see as it is, aka locking the fund. But when returning to the economic nodes, for example, large centralized exchanges, if they have not upgraded their nodes, then and someone claims the funds, then the user will find that they've lost their Bitcoin.
And that of course requires hash rate to, number one, begin supporting this new consensus change, so that it's even possible for some users to lock their Bitcoin in these scripts with the new opcode. And then they would also then need to unwind that, redo or undo that, and no longer support it to claim the bounty. But if they do, if 95% of the network is unupgraded, then those nodes won't blink an eye. And if there's like $1 billion locked up in Bitcoin, they can just be taken. I mean, it will reach a threshold which will incentivize miners to do that. And it raises all kinds of interesting legal questions. Is that theft or not? I mean, to 95% of the network, it's not theft. They never upgraded. They never agreed to these rules. Those aren't the rules of Bitcoin. And then, of course, people who locked up their Bitcoin in that, they'd be like, those are the rules of Bitcoin.
Okay, I wanted to ask you, this is kind of tangential, but so there's like this ill-founded belief, I think all of us would largely agree, that miners completely control the network. Maybe this is just some FUD that people often spread. But there is some legitimacy to the fact that ultimately those who mine blocks in the network and enforce the economic conditions. But I've heard this, so that's one side of it. The other side is that I talk to people who are often in contact with miners. One of our podcasters is a former miner, and he tells me that he goes and talks to these miners, and they're out in oil fields and they're harnessing, flare gas. And he's like, I got to tell you, these guys have no idea what CAT is. Like, they have no idea what CTV is, right? And I'm curious I don't know if you guys have perspective on this. Is it generally true that the miners seem relatively distanced from activation and, the actual upgrades to Bitcoin in your mind?
I would agree with that. And not just miners, but investors as well are pretty in fact, we introduced the concept of state of mind in this project.
Yeah.
Where any individual, like any of us or any miner, investor, anyone in the space is in some state of mind with respect to a consensus change proposal. And everyone starts in the unaware state, right? And then some of us become aware. But I think, whether it's CTV, CAT, any of the, TX hash, there's like 10 different covenant proposals. Ellen, Hans, and great script restoration. What percentage of Bitcoiners do you think are aware of GSR? I mean, very tiny, right?
5% maybe.
And then like CAT and CTV, a higher percentage have seen it just because there's been more noise around it. But the percentage that can explain benefits, risks are very low. So another point of the project is like, hey, there's value in getting out of the unaware state of mind to where you either support or don't support a change, or you might wind up in like, you don't really care either.
Yeah.
Sort of apathetic, but leveling up knowledge, like empowering people with more knowledge, I think creates a stronger Bitcoin network. There is a social phenomenon to Bitcoin. It's not just that. Again, Bitcoin 101, you can tell people it's all based on math and cryptography. Great. Like that's, a huge component of Bitcoin, but it's not completely reliant on that. It's reliant on humans.
Yeah. And actually you brought up this state of mind. And this was a big part of the paper, right? You had like sort of number them 1 through 6. Can you kind of break down the rationale there? And like, you don't have to go through every single one, but maybe just like the point being made in sort of measuring this state of mind, right?
Yeah. So I think the major distinguishing point in measuring the state of mind is the willingness of the stakeholder to expend resources, or be it time or capital, to either push for a change or to be against a change. And every single stakeholder can make up their own decision. But where the most dangerous point becomes is if a stakeholder is apathetic or unaware. And it might be okay for them to choose to be apathetic if they view a consensus change as not relevant to their day-to-day. But to be completely unaware risks that stakeholder missing the opportunity during the consensus change process of using their power. And even worse would be waking up 5 years later and having immense regret that, for example, if an investor purchases Bitcoin under certain under properties today, if those properties change significantly in the future and they do not use their power in terms of participating in, for example, like chain split token markets or various forms of prediction or derivative markets during the consensus change process, they'll wake up 5 years later and probably just sell their Bitcoin because it's changed so much from what they signed up for. So that's where state of mind really comes in, is that trying to get stakeholders to pick a side if the consensus change is relevant to them, which puts them in the position to use their powers during the consensus change process.
In the paper, you guys weren't like so prescriptive in terms of, I think this is much more definitional and sort of like a broad overview. I'm curious though about the education aspect you brought up and how, a more educated Bitcoin network is a better Bitcoin network. We can probably say with some, high degree of certainty that 95 to 99% of BlackRock ETF holders have very little understanding of what's going on, right? They know 21 million and they know that maybe they're financial advisor yeeted some in for them and they're happy with the results. How do you feel about the education process? Now we're kind of getting into a little bit more personal questions if you want to delineate here, but how do you feel about the current state of education in terms of, informing these stakeholders that you discuss?
I mean, it's dramatically better than it was 8 or 10 years ago. There's way more content, higher quality content. And that's a natural consequence of there being, 100 times more people in Bitcoin today than 8 or 10 years ago. There's more people, more, better quality people writing content. But there's still a problem though, in that there's a lot of content. So how do you where do you start as a newcomer? And because of the decentralized nature of Bitcoin, there's no authority. Like if you want to learn about the US government or Google or something, like you just start, you just go to the authoritative source and read what they have to say. And that's what they're claiming they are, right? Where Bitcoin, it's like the three of us can all have different views on what Bitcoin is. You might be like, it's digital gold. And I'm like, it's peer-to-peer currency. And, so I think there's room for improvement on how to curate that content. And also just everyone has a different starting point too, what might hook them on their curiosity. So, that's a strength of having lots of different educational material though, because each has a different angle or hook too. But that's like, talking about Bitcoin in general. I mean, getting into this is like a more advanced topic. This meaning BCAP and consensus. It's definitely more advanced. So, you mentioned earlier, like people that work at BlackRock should read this. I agree. I mean, like anyone working full time in the space should be aware of this project and read it and understand it. And anyone who is a significant stakeholder, if you have like a lot of capital or a large percentage of your net worth in Bitcoin, you should read this, because actually a really good insight from the project, one that I wasn't expecting, is that we do think self-custody investors have a disproportional amount of power compared to the BlackRocks and even like MicroStrategies of the world. Why is that? We do reach a point where there's a chain split and there's two coins or there's a futures market, a huge determining factor on what is Bitcoin is which coin is valued more. What's the price of each, right? And how is that determined? It's not determined just because if you own 100,000 Bitcoin, but you're not acting, you're not determining price. You need to actually take an action that's either selling one coin, buying the other, or doing both. So if you really have conviction on coin A over B, you can dump all of B and double your stack in A. So people who have not only Bitcoin, but the ability to act quickly, which self-custody investors have that ability, have tremendous power. If you look at BlackRock, they're highly unlikely to participate in dumping one coin and doubling down on the other. That would be like suicide for them if they made the wrong decision. And plus, if you think of like a BlackRock, they don't own the Bitcoin and they don't control the Bitcoin, because Ace controls it and the owners are the shareholders. They've got an army of lawyers. They're going to be conservative. They're going to hold both sides, see where the dust settles, and then they're good. So the self-custody investors have a big leg up.
Yeah, I think it's
encourage people to self-custody because it gives you more power.
Yeah, I think it's a really good point. Also, there was Ren, you touched on this in the paper as well. I sort of compare this a little bit to the difference with maybe proof of stake, where those who do have more coins ultimately control the network in some capacity, right? Like that would be contentious if I said this amongst Ethereum people, but that is more or less functionally how it works. What's interesting though, in points that people bring up, which I think are legitimate, is look, if Michael Saylor owns 2% of the supply and he decides to dump on one side of a fork, that can have a massive economic impact. And as a result, certainly push the direction of, what the future of Bitcoin is. So I saw you did mention this kind of phenomena in the paper, Ren. Was this like, what are your thoughts in terms of like large maybe not, maybe self-custody, maybe not self-custody, selling on one side or the other, and the kind of the determinants there?
Yeah, so there are two factors here. One is the speed of the action, and the second is the magnitude of the action. And the reason the speed of the action really matters for Bitcoin in particular is, as a proof of work chain, if you act really, really quickly, and that's why we think that the self-custodying investors are so powerful, what you create is a price spread that magnifies a hash power spread, which means that the coin that ends up with the lower price has a disproportionate amount to catch up across time, because the hash power that is built up on the more valuable coin compounds over time. And with respect to the magnitude of the action, it is true that if a large corporation with a large balance sheet of Bitcoin chooses to sell one and buy the other, that will create a large market impact. And I'm sure that will create headlines around the world. But at the same time, public companies are accountable to their board of directors. There's a ton of regulatory considerations with respect to treasury, how public companies treat their treasury, whether it's dollars, US treasuries, or Bitcoin, that might impede or slow down their ability to act.
Yeah. Okay, I want to touch on one last thing, and then we're going to start probing about various proposals and soft forks and all sorts of exciting stuff. But I did want to ask, I saw that one of the stakeholders you mentioned, or one of the actors you mentioned, is media influencers. And we kind of touched on this, and I guess this kind of partially overlaps with the education aspect. But what degree do you see the power of media influencers? Like, if you had to kind of summarize the point you made in the paper, like what role do media influencers? I'm not saying myself by any means. I'm just
you give me love, Gwart. You matter.
The people who have a lot more followers than I do, and also, I don't want to say something too contentious here, but there has been, some maybe sentiment that a lot of the larger media influencers may not actually always know what they're talking about, and may, have some ideas for Bitcoin that may not actually match with other people's ideas of Bitcoin at the very least. But what kind of role do you see these people playing? Or maybe if you want to name some, you don't have to, but what is the role here?
Well, as by media influencers too, it's not like you don't have to be the New York Times or like have your own official pod. It's like anyone with an audience, right? If you have whatever form that takes. And then if you have an audience, they're listening to you, and what you say matters. What you say is powerful, and you can definitely change sentiment of the direction of Bitcoin, and that can be either again an advocate for change or fighting against change. Sorry, Ren, you're gonna say something.
Oh yeah, to add on to what Steve mentioned, media influencers, their incentive is to generate engagement. Some have subscription models, some have based models, but generally it's to gain engagement, gain views. And I think that media influencers, from the incentive side, they have sponsors, so they try to act in the best interest of their sponsors. And historically, although there have been some examples of media influencers who have built up a lot of credibility and then burned it all in one kind of like Thanksgiving turkey getting eaten type of moment. Generally, I think in the long term, the media influencers who are credible are ones who try to present base reality, which is really, really hard, because the more normally the more like spicy or controversial topics, especially controversial takes, tend to gain more engagement. But I think over the long term, just presenting base reality will win out. And in terms of their powers during the consensus change process, they have a lot of power in the early stages, because that's a period of time when investors and the market is usually unable to express their preferences about one consensus change over another. So during this fog of war period, people might have media influencers are able to disproportionately alter the perception of reality and support, either by making it seem larger than it is or making it seem smaller than it is. But over time, as markets start to appear, futarchy kind of takes over, where it's often hard to deny like tons of volume on an exchange and a price chart in terms of that being base reality.
Yeah, my our mutual friends will be very happy to hear you mention futarchy. It's our slaughter friends love hearing the futarchies. Okay, so I want to ask then, maybe where are we in terms of consensus and terms of recent proposals? Like you mentioned, Steve, Ellen Hans, TX Haas, CTV, CAT, great script restoration, great consensus cleanup. All of these things are being talked about. Where do you feel like we are, just kind of personal opinions here, if you will, in terms of, building consensus around change or not change, whatever it may be?
Yeah. Let's see. Again, these are my personal opinions, not the PCAP project, but I feel like the great consensus cleanup probably has the least amount of awareness out of the ones you just mentioned. But it is the most likely to be activated next. And the reason is that it's a different category than all the other changes. All the other changes are adding features and functionality to Bitcoin, and in particular on covenants, increasing the expressiveness of Bitcoin, which clearly has benefits, but also has like risks and costs, and that's where there's a lot of debate. And the fact that there's like 8 or 10 proposals, you could even be pro covenants, but it's like, which one? And it's like, you have your favorite, I have my favorite. But with great consensus cleanup, it's bug fixes. So, and so as long as these bug fixes can be done in a way that people are confident it's not introducing new bugs or new attack vectors, I think most people in Bitcoin would consider this a no-brainer. And even people who are on the very conservative side of things, and if you just believe Bitcoin is like digital gold, store of value, it's the granite under Manhattan, that kind of perspective, and like sort of Bitcoin's perfect, well, you can show them that there's actually several consensus bugs and vulnerabilities and the security threats that will destroy Bitcoin. So I think I think anyone can be convinced that these are worth fixing. So there's also a developer who, the Great Consensus Cleanup was first proposed by Matt Corallo over like 5.5 years ago. And then there's a new developer, Antoine Poinsot, who's been working on it for the past year or so, sort of picked up the torch, grabbed the torch. And he's now pretty much focused on that. So it's getting the developer attention needed to code it, write the tests, completely do all the thinking around it, getting feedback. So I think that will be it'll be a really great test for, can we change Bitcoin again? Mm-hmm. Because if we can't get consensus and activate great consensus cleanup, then I think everything else, all hope is lost. Just because I think that's super straightforward. As far as the other changes, I think a big challenge is that there are many covenant proposals and there's not even consensus. We could pick all kinds of small groups of people and there wouldn't even be consensus among those small groups of people. If you only take developer advocates for covenants, I don't think we'd reach consensus on the best proposal to move forward. There is among that group of people, there is sort of like, well, this is my favorite, but I'm cool with these other 3 too. I just want this functionality. There is that sentiment, but I personally sort of sampled lots of different groups of people, including across all the stakeholder groups. And it just seems like we're far, far, far from consensus, not only on which covenants won, but is it even an urgent need for covenants? I think we're far away, which is why I think it's dangerous when certain people are, on social media, super provocative takes about like it's activating in 2024, it has consensus. And I actually, honestly, that sets things back because there's a large group of security-minded conservative people who don't like small groups of people being able to like dictate Bitcoin. So they see that like premature sort of state of things, and it could set things back a year or two.
Yeah. It's interesting you say that also, because I think there's been maybe Ordinals Runes has, brought in certainly a new group of Bitcoiners. And I think they often see, oh, we're going to have CAT next year, right? And they're hearing it from a relatively small number of people, right? And I think they are doing something that they find valuable. And I'm not here to say, whether or not what they're doing is virtuous or not, but they're trying to push Bitcoin forward in their minds. And we have this new group of people who are sort of like, oh, well, we're getting CAT next year, right? And then you talk to somebody at Chaincode or Brink, and they're like, it's very, very, very different perspective. And it is interesting. This kind of goes to the media influencer aspect of it, where I think there's definitely it still seems like a fairly big divide between what you may see people talking about and then what is like coming into reality anytime soon, right? Go ahead I don't know if you have any thoughts on that.
I mean, another observation is just everyone, no one, there's no one person, or even collectively, we don't know where we're staying on consensus. Like measuring consensus is really hard. We speak to it in the project, but that's an area where the project could improve, is like, improving that. But measuring consensus is hard. Each of us have our own information bubbles. Like we don't have all the information. We have a subset of the information. And I've seen people post on Twitter, like developers I really like and get along with and talk to, but then they're like, we have consensus. And it's like, I talk to them privately. I'm like, there's all these other people who are either unaware or they are resisting or they don't think it's priority. So I think everyone's bubble is relatively small, and like human nature is to not really realize that.
Yeah.
And that also means changing Bitcoin's only going to get harder over time as more and more people are involved.
Yeah, I completely agree with that. Bitcoin is by far the most decentralized network. There is no foundation team. There's no founder that you can back channel and talk to push your changes forward. And I think with respect to the different groups and their viewpoints, especially regarding covenants, I think my personal view is that the frustration among that group is probably going to grow into 2025 and 2026. And probably they will try to do something. We each have our own personal opinions on what's going to happen. But most likely, I think just given if you have a divide in terms of viewpoints, that gets magnified over time, because the frustration of feeling like that group is not heard, it just keeps growing and growing and growing until a point in which to me, it looks very much like SegWit, where you have this building up process and this division between some of the stakeholder groups. And there probably is a breaking point where a contentious consensus change might be forced. And only then do we fully see the hidden preferences. Because as Steve mentioned, each of us, we don't have a full view. There's no single individual or firm or entity in the world that can claim that they have a full view into where the state of consensus is today regarding any of these proposals. And there's no, and that is also true historically with Bitcoin as well. So the only way to reveal each of the stakeholders' hidden preferences is probably a contentious consensus change process that will probably look very different than the ones in the past.
You mentioned they may hit some breaking point, right? Like it sort of builds up in next year or two. What do you expect that to look like in terms of implementation? I've heard, I've heard many things. I've heard from Paul Stewart for the past 5 years as to what that looks like. I'm curious what you think that would look like. And, you kind of address how some of this works in the paper. So what in your mind would that look like for, a user, average person?
Yeah, I'd start with like a fact is every consensus change that's been activated on Bitcoin historically has been merged into the Bitcoin Core project.
Yeah.
And for those that don't know, Bitcoin Core is like 99% of the network. I mean, pretty much everyone runs that software. So if a consensus change does get merged into Bitcoin Core, that doesn't mean by definition it's going to be activated, but it is a huge step forward towards activation because that's the software everyone runs. Of course, if the Bitcoin Core project isn't reflecting what the Bitcoin ecosystem wants overall, like let's say we believe in Magic Wand and we knew everyone in Bitcoin wanted a change, but Bitcoin Core was just being like, unresponsive, then a nice thing about how open source works and how Bitcoin works is that you can fork the project or you can create an alternative implementation that has that change, and then anyone is free to adopt it. So it's very good to have that exit option. We're not we're not beholden to the Bitcoin Core project. However, we get into it in this paper. It's a very tall order to get the network to switch software projects and to upgrade to a different project. And we actually outline in BCAP a number of questions anyone running Bitcoin software should ask themselves before switching to another or using any project, including Bitcoin Core. But Bitcoin Core is dominant for a reason. It's like tried and true and tested and high security and lots of eyeballs, and there's all kinds of good attributes to it. So before you switch away, you should ask yourself a lot of questions. If everyone's asking themselves that questions, it's just a huge barrier to switch. But to answer your question, what could it look like? Well, people who want to change, who are unable to convince the Bitcoin Core project to merge it, will create their, they can just fork core, however they do it, create software that has a change, and then market it and try to get adoption of it, starting with miners, but also, exchanges and economic nodes. I'm guessing, Ren, is what you think will transpire if Core doesn't merge CAT.
Not speaking to CAT in particular, but I think that path is sounds right. And I think with covenants in particular, I purely a personal view, I think it will look something that is more similar to a flag day than a slow, gradual grace period rollout. And the reason for that is a flag day protects against the bounty claim attack vector because it forces the nodes on the network to switch over. It is highly risky. Flag days create a high probability and risk of a chain split. And when we're talking about the stakeholder groups, it might come across that each stakeholder group is homogeneous. They're not. There is no single exchange in the world that is the Bitcoin exchange or the dominant crypto exchange. There are probably 10 very credible economic nodes that are strong within their own regions and parts of the world. So I think, but if I had to guess, I think it would be an alternate client with a very aggressive rollout period, combined with a very high marketing spend or high marketing type of approach to create the perception, which might also be reality, by the way. I'm not too sure, that there is strong consensus globally that a consensus change should happen.
Yeah. Steve, you said cat, like kind of elephant in the room.
I thought it'd spice it up.
Yeah, no, I think we were kind of dancing around it, right? Like, let's be honest here. In terms of maybe the most aggressive, and I was mentioning, Udi and Eric on Twitter, like I'm friends with them, but I see what they're doing. I'm curious if you think that is kind of the Schelling point now. In terms of is that what you think becomes the, it's kind of black and white Bitcoin community, cat or not?
I mean, I agree with Ren that there's a high probability of that occurring in 2025. There's substantial amount of venture capital money flowing into Bitcoin Season 2 type startups, including Taproot Wizards, but many others as well. So you've got a lot of money at stake, investors who want to see this happen. Obviously, the startup founders and startup teams wanting to see this happen. So they're in a position to use resources and really fight hard for that change and spend a lot of energy on it. So I think that there's a reasonable possibility of that occurring. But again, one thing we try to achieve in the BCAP project is to illuminate risks with that path. I would highly recommend anyone wanting to change to go above and beyond trying to get it into Bitcoin Core, which means a bunch of things, but that's just a far less risky way to deploy a change in Bitcoin. If it doesn't go into Bitcoin Core and it's alternative client, that's why we have like 15 pages in this paper talking about the bounty claim scenario. I think it creates a very brittle and fragile network, one that most people in Bitcoin didn't sign up for and don't want. I think investors won't like it. So if it does pan out like Ren was describing, my own opinion is I think it will. I'm a little suspect that even minor hash rate will play along, but it could. But I think if we approach a point where there's a chain split, I think investors will side with like legacy chain and the conservative side. They'll find it distasteful if there's like a aggressive flag day, because that's not consistent with an investor thesis, I don't think. But when I say investor, people holding Bitcoin, not VCs who invest in a startup that needs to change. Those investors, of course, will be advocates, but I think it'll blow up in their face. But I've certainly spoken to others who think the exact opposite of me. They think that economic nodes and investors will, in the scenario of a bounty claim, that they won't want to be associated with theft, and they'll find the least risky path is to just upgrade their software to this alternative client instead of Bitcoin Core, and that's actually a less risky path. I disagree with that, but that's another perspective.
Yeah, that's interesting. And I'm not trying to put you on the spot here and say too much consensus stuff. I think contentious stuff. I think you spiced it up a little bit, but I am curious, like and maybe not just with Cat, but with a lot of the marketing we've seen, maybe especially in the past 2 years. Do you feel personally that this has gone along with the Bitcoin ethos? Do you feel like this is productive? I know you said that, we're all in our own little echo chambers. We see what we see, our own little bubbles. But I'm curious, like, do you think this is a productive way to go about change?
I'm generally like, I think a free for all is fine because again, there's no blueprint. Yeah. So there's lots of different angles. So I don't fault anyone for being proactive on Twitter or going and having talking to stakeholder groups and trying to convince them. I think that's totally fine. Something that bothers me a little bit is I would call it premature activation talk, or creating an aura around something that's not true. You can also say that's brilliant marketing, will it into existence, which I think is probably what certain people are trying to achieve. But
yeah.
But it does have the cost or ramification. Like I mentioned, there's a group of Bitcoiners who resist that. So independent of whether someone likes Cat or TX hash or any of these changes, you can have an opinion of whether yes, I want this change or not, and then separately the method in which it's activated. Yeah. And those are two distinct things, and they're both very important. So creating a lot of people in the state of mind 6, which is they expend resources to resist a change. If you're an advocate for a change, you don't want to increase the size of state of mind 6 group. Yeah. Because it's going to, all it does is lengthen how long it will take to make a change. It'll decrease the probability of ever seeing that change. So you both need, if you want to change, you need to both be an advocate, but also minimize that damage. I mean, my recommendation for people wanting changes are, creating both a layman's version and a technical developer version of benefits and risks. And those are two different documents. And the risks portion is really important. Because anyone saying like, oh, I want this change because it has these 3 benefits, period, I would say you haven't done your homework. Yeah. Any change has risk, or at least merits risk analysis. So show your proof of work on the downside, the risk side, because that's how you're going to appeal to the more conservative minds in the Bitcoin space.
Yeah. Okay. And then I kind of want to finish up with a couple more questions. Ren, I'll kind of pitch this to you first. You spent a lot of time in crypto in general, looking at a lot of other decentralized networks. I'm curious, what in your mind does Bitcoin need? Now, I know that that's kind of even just saying that is a bit contentious. I think you talk to some people, they'll say, Bitcoin doesn't need anything, right? Like, and I think it's a very reasonable kind of claim to make, right? Like largest crypto market, largest market cap by some order of magnitude. It's almost a bit like audacious to claim that Bitcoin needs something specifically. But you've spent a lot of time looking at the rest of crypto, and what would you like to see? This could be a specific covenant or just some functionality come to Bitcoin in your mind. Like what would make it better? And then obviously, Steve, I'd love to hear what you have to say after.
Yeah, it's pretty interesting. I think after spending probably like the past 2 years since Ordinals came out studying Bitcoin, I think actually the answer would be the opposite. I think the alts need lessons from Bitcoin a lot more than Bitcoin needs lessons from the alts. In like these networks are fundamentally they're all deep-in networks, and that's a very contentious thing to say, but they are networks that incentivize physical resources to facilitate with some goal or task. And Bitcoin does it in a way that where on the margin, additional resource addition onto Bitcoin from the miner perspective is additive to the goal of Bitcoin, increasing the cost of a 51% attack. And that additional resource that's added to the network is proportionate to its cost. And there's enough balance of powers and separation between the block builder and the holders of the asset that create a separation of powers in a way where you have a credible path to store value. With the proof of stake networks, one thing that I recently realized is that the incentive structure is much closer to a company than it is a decentralized network, because investors own shares in a company. They elect a board of directors who set the roadmap. That might be similar to a consensus change in a proof of stake network. There's no separation there. And proof of stake, in that the holders are running the validators or delegating to the validators, they technically are able to express their opinions in the same way. We haven't seen that yet. I think part of that is how nascent these networks are. But we're probably approaching a time when some of these underlying core incentive loops of the proof of stake networks are going to, we're very likely going to see that over the next 5 years with the proof of stake networks. So I think that's what the alts can learn from Bitcoin. And I think what Bitcoin can learn from the alts, I think Bitcoin has a North Star. It has one thing that it's optimizing for. The protocol very clearly has that loop very locked in, and it makes sense on every single margin. So all the sensitivities line up across the board. Satoshi was an absolute genius. And I think these protocols, as long as they stay true to the thing that they're trying to do, there isn't really any additional feature, or like everything else is kind of like gravy to some sense. It's extending, for example, like improvements in the Lightning Network, things like timeout trees, like extending that capability to like some degree, I think probably does make some sense. But the most important thing to get right is actually the core mechanism, making sure that the base incentives make sense in terms of how resources are added or removed from the network.
Yeah, it's funny. That was not the response I expected, for what it's worth, and I completely agree. I think it's hard to come back from proof of stake, for what it's worth. I mean, in terms of the resource allocation aspect that you talk of, it's like very functionally different than in proof of work. And I think that a lot of people realize this. There's a lot of mechanism designers out there trying to mimic the same degree of one input to one output, and it scales linearly versus sort of like exponential returns to scale that you may see. I'm being kind of vague in how I describe this, but with proof of stake networks. So that's not the answer that I expected from you, but I wholeheartedly agree. And Bitcoin is obviously optimized first and foremost for this kind of like steadfast, from the bottom up money approach. And yeah, I would agree. But go ahead, Steve. I know Spiral's done a lot of work with Lightning. Matt Carlo spent a lot of his time working on Lightning. Is there anything specific that you would like to see? You know, like even one argument that I hear, and I'm going to let you respond. I just wanted to point maybe one thing that I think is a good point is like with some of these layer twos, right? Like it would be nice if we had a way to receive Bitcoin directly to a layer two wallet without having to open a channel or something like that. Or if we could, create coin pools or, what ways to share UTXOs or something like that. Are there specifics in your mind that you would like to see to really like, push the network forward?
Sure. And my bias here is like, I view Bitcoin as emerging money, and that includes store value and ultimately currency. That's why I work on Bitcoin. So, I don't get excited about gambling casinos and tokenizing other assets. I don't shit on that either. Like, I don't mind that it exists and people do it. Like, I acknowledge that. I just don't spend my own time on it. And I also don't like Bitcoin needs it. Like, Bitcoin doesn't need to support tokenizing other assets. So that colors my view. So I'm always like, well, if we're gonna, first of all, I'm team slow and steady. So I'm not anti-change, but let's be really slow and methodical. And then like questions I would ask on any change is like, how does it improve Bitcoin's money? And what are the downside risks? So that's why I'm an advocate for great consensus cleanup, because it fixes bugs, it makes Bitcoin stronger. And as long as we've done our diligence on the downside risk, then great. In terms of covenants, other changes, anything that would enable substantial scaling of cryptocurrency payments while retaining as many properties of on-chain Bitcoin as possible, I'd be an advocate for. Like Lightning. So this year, Spiral has spent time studying. We have a weekly study club. We've studied every other scaling proposal, ranging from ZK proofs to ARC to Spark to John Law's timeout trees to superscalar, all these different techniques, as well as the underlying covenant proposals. Conclusions from that: one, there's no silver bullet has been discovered. Like Lightning's been shit on a lot the past year and a half. Obviously, it has drawbacks, and it is not a silver bullet. But I think it remains true. Lightning is the best scaling solution that retains as many properties of on-chain Bitcoin as possible. That remains true. And the others can be. I'm super happy there's innovation and people are thinking of these other solutions. I think some will be successful. Lightning will remain the glue between all these systems, though. I think Lightning is one as the glue between all the different systems. So like ARC, let's say ARC becomes popular and Spark becomes popular and they have millions of users. They'll all talk to each other, and Cash App and Venmo and custodial services and eCash mints, they'll all use Lightning to talk to each other. So Lightning is one at that layer. But in terms of billions of users using Bitcoin, I don't see how any covenant proposal actually unlocks some pure scaling solution. Like with the ZK proofs and even with the trees and stuff, it kind of, well, like with ZK proofs, I feel like it kind of matches Lightning in terms of scale, but it doesn't like million X like, which is what we would need. In terms of timeout trees, it is very nice. Like, and timeout trees are existent in ARC as an extension to Lightning. And then Superscalar is similar, but doesn't require a covenant change. Now, they do scale Lightning much better way, but at the cost of a unilateral exit can cost 20 times more money. So it calls the question, what is non-custodial? If it costs me $1,000 to exit, then is that, like, I think it's an interesting trade-off, but we need to acknowledge the trade-offs there. And something like that can be built today without covenant. So let's build it and get users on it. And then if people are liking it, then so I'm not anti-governance. I don't see an urgent need for any covenant proposal. Even though I could name a dozen projects that would benefit from covenants, none of them really require covenants.
Yeah, you actually, okay, so I said that was the last question. I do this every time, but you actually brought up another good point, which I always mention when it comes to Bitcoin. And people, like, for example, the past few years, there's been a lot of kind of criticism of Lightning. And, I think, as you mentioned, a lot of the criticisms are legitimate. With that said, the goal of Lightning was to scale Bitcoin as payments. And the reality is that most people right now want to hold Bitcoin, especially if you take kind of this like long-term rational view, which is that, we have this hyperinflating or inflating fiat currency, and then we have a much better, harder currency. Well, the 99% of people, the incentive is to hold it. So then this is like, people have seen what's developed in the rest of crypto, and they've said, oh, we need to bring this to Bitcoin. And it's one of these things where I'm like, it's sort of a chicken or the egg. Like the reality, like most people just want to hold Bitcoin, right? Like they don't really want to go and degen with it. But then what my question is, do you think that there's this hard to parse kind of problem with, okay, some stuff needs covenants. We can agree or disagree as to whether or not that's true, but some stuff needs covenants to function really properly. We won't know if people really want to use it until we get covenants, versus we can build it now, but it won't be exactly what it looks like with covenants. And so I am always curious, like people talk like ZK rollups or something, right? And it's like, well, go build it now and see if it has demand. But their counterpoint is, well, we don't know what the true demand is because it's not the real version. And this is always kind of like, weigh both sides. And I don't have a personal opinion, but it is an interesting question, right? Like that's not the finished version of it.
Yeah, I think it's a fair point. And like AJ Towns has created the Bitcoin Acquisition Project, which is a fork of Core and allows the testing of stuff. And I think it's a great project. I'm glad he created it. And he even measures like usage of these different things. But it doesn't seem like just because something doesn't get usage there, I don't think indicates no one cares about it. So just to the point you just made. So I think it's a valid point.
Yeah, we haven't, like, to be quite frank, we have not seen anywhere near the demand for rootstock and stacks that we've seen for Ethereum. Like that's just functionally true,
You also just mentioned like a lot of people in Bitcoin want to hodl that and they don't want to degen or whatever. However, even for people who hold Bitcoin and they want to degen, we already have proof points of that happening. Like Wrapped Bitcoin has like 9 billion or something. I mean, like a substantial amount of money that where people have taken their Bitcoin, wrap it up, and then they do whatever they do on Ethereum or other networks. And now there's much better solutions for that, which reduce trust, counterparty risk, and trust. In a startup called Lava, which just got funding from. I'm an investor, so everyone knows.
Me too. I should disclose that as well.
But they just raised money from tier one Silicon Valley firms, Coastline Founders Fund, who don't normally dabble in Bitcoin companies. And they're doing it because there's a proven market there. And the way Lava works, they use DLC technology that allows a person who holds Bitcoin to keep it in self-custody, get a US dollar loan, in like USD C or some kind of stable coin, and then do whatever you want with it. So if you want to go degen somewhere else, great. So for demand that has it, for people who have Bitcoin who want to degen, go use Lava and go degen to your heart's content, and you don't have to do it on Bitcoin.
Well, thank you guys so much. This was fantastic. Got to hit on the paper, got to hit on a lot of other points that I wanted to ask two experts on. So thanks so much for coming on. Appreciate it.
Guys, say one more thing before we...
Sure.
One thing we didn't mention, so BCAP was co-authored by Lynn and Ren and myself, but it's an open source project. We had 24 reviewers before we published it, and including you. Thank you so much. And we don't consider it a finished product. We think something like this needs to be a living project over time as Bitcoin grows and changes. And so we consider it a great beginning, but not the end. So we welcome people to come give feedback. We invite criticism, but we also invite people to help improve it. So we welcome PRs. We'll take a look at them and hopefully merge some of them.
Awesome. I will shill it relentlessly. Thank you guys so much.